All right, well, Brookfield is a universally known business for touching the global economy, whether it's real estate or renewable energy. The company has a wide footprint and is increasingly getting Berkshire Hathaway references as they prioritize the long-term plan. Case in point, the CEO, Bruce Flatt, now talking about an increased focus on their insurance operations. Christopher Ballard is a managing director with Czech Capital Management and joins us to talk a little bit more about the business. Nice to have you with us. I'd say let's talk about the quarter, but these companies that are thinking in decades rather than 3-month increments are probably worth considering from that vantage point. For those who want to know what sort of Brookfield really represents as an investment today, how would you characterize it, Christopher?
Yeah, it's definitely a long-term investment with a great global footprint in a lot of different industries, being, renewables, infrastructure, real estate, private equity, asset management. They really have their hands in a lot of different aspects of our lives, whether it's through corporations and institutions or governments. So yeah, if you're thinking about Brookfield Asset Management, it has so many different moving parts and components. You really want to think of it as a long-term play. The small moves that happen, like on a quarter-to-quarter basis that you mentioned, will all look kind of small to us in the fullness of time. So when you're thinking about it, you want to kind of think about something that is in a perfect place to grow over the period of time as the world develops, and it seems to be right on the cutting edge of this AI infrastructure build out. There's really so much to get into when it comes to the business, but I like that you mentioned that you don't really want to think about it on just a quarter-to-quarter basis, but.
Well, I think, some of the things that they've been talking about even this week would speak to the fact that it's very difficult to measure over a couple of months. Christopher will hopefully rejoin us in a little bit, but just as some context for the company right now on that AI part, they are working to assemble 7 major AI computing sites. That would include power and data center shells, which are going to be built out over the next 5 years in the US, the UK, Canada, Europe, and they've talked about the cost associated with that being possibly a couple of $100 billion in capital. So, if you think about what big tech giants are spending, CapEx bills for Amazon, Microsoft, Meta, Alphabet next year are enormous. Part of that is because they have to think about some of their data center needs. And now Brookfield is in the same conversation, a company that has benefited from its real estate footprint and sees these data centers as a part of the big real estate play going forward, is putting that into full gear. And beyond that part of the story, Christopher, of the AI data centers, one of the headlines this week is this goal for the company to focus itself into an investment-led insurer. And that kind of prompted some sort of comparisons to Berkshire Hathaway has a big insurance component as well. As someone who tracks the company, what's been your sense of what the messaging from the leadership there has been on what they would like to do?
So on the insurance side of things, they really have their biggest component is their future growth engine, which is the wealth solutions side of the business. So the wealth solutions they're making purchases on average of like fixed income annuities, if you will, and taking those assets and redeploying them at much higher rates of return. So last quarter, they had $391 million of distributable earnings coming from that side of the business, which continues to grow at a very rapid clip. And we see as being at a run rate of about $2 billion on an annualized basis for distributable earnings in the very near future. At the current run rate, it's about $1.6 billion. So yeah, when they're getting into all aspects of insurance at this point, but right now it really is this wealth solutions aspect of the business that they're focusing on. They're trying to deploy as much capital into, and then as they do so, they're able to get these lower rates of return, and then have this nice size spread as they deploy those assets to Brookfield Asset Management.
So at the end of the day, should you as an investor allow yourself to think about this company leaning into multiple trends, whether it's sort of getting more out of its insurance opportunity, whether it's leaning into the AI infrastructure opportunity, or as our last guest said, looking at this as a possible just broader infrastructure play when in Canada there's, and obviously there were previous Brookfield ties for the prime minister. The nation-building spending benefiting a company like Brookfield. Do you have to sort of think about it in those components? And if so, do those trends, do you think, bode well for this as an investment?
Absolutely, the trends bode extremely well. And I believe that at some point in time, they will do some partnerships in Canada. The numbers have to look right for both Brookfield and the Canadian government. But yeah, like with Google, I don't know what was described there for a bit, but with Google, they actually have a recent inked deal with Brookfield where they're going to, it's a very unique and one of its kind deal where they're going to tap into their hydro facilities in a couple of places within Pennsylvania where they're going to have about 3 gigawatts of power they're going to be able to tap into from those facilities to power their AI infrastructure. So you're talking AI infrastructure. You're also looking at a deal with Duke Energy recently, where they have a stake with Duke Energy in Florida, where they're going to actually be able to tap into that electrical network and power utility network that Duke has there. And then the Swedish component as well. So they're in Sweden. They just did a deal for their digital infrastructure build out. I think they did about a $10 billion deal this past quarter. So yet you really do want to think of them as infrastructure. So that again has to do with like hydropower, electric power, all power needed to drive these new AI infrastructures where all the spend is going. Yeah, they're on the cutting edge, kind of right in the middle of that forefront.
Okay, Christopher, appreciate the breakdown. Thanks for joining us. Christopher Ballard is a managing director with Czech Capital Management on the Brookfield story.